This episode of the Pete the Planner Show is brought to you by myindiana529.com. If you need to prepare for your child's future education expenses, do what I do and set up an account at myindiana529.com. Hello, everyone. And by everyone, I mean it's a Tuesday at noon. We usually are here on Fridays at 10. Everything's thrown off. Dame is here. Kristen is here. We'll start with future donkey owner, Kristen Elanius. Hello.
Hello.
FDO, future donkey owner. And Damian Dunn, what is the most aggressive animal you've ever owned? Like you're a cat guy, a dog guy. Ever own a bunny or a cheetah?
No, a little box turtle is the most exotic I think I've probably owned.
Was it a Russian tortoise?
No.
Okay.
It was very slow.
Kristen, how about you? You got lots of cows in your life. What have you owned that's like a country goose or anything? What have you got?
No, nothing like that. The only thing, I only ever had dogs, and now I sort of have cows.
Yeah.
That's it.
All right. Well, donkey on the way. Hello, everyone. Based on our schedules, we've got a few strange weeks ahead of us. We are on Tuesday this week, Thursday next week, and then I've got to talk everyone into Thursday the week after. And everyone's upset about that. Today's show is a special one for lots of reasons, and here's the reason. We are going to talk about the most overrated pieces of financial advice that exist. Dame asked before the show, is this going to turn into the Hot Take Olympics? And I said, I don't think so. But then he reminded me that his overrated piece of financial advice may anger me and send me through the roof. And I don't know what that is, which is what makes for good radio, streaming, and podcast. You guys, has it occurred to you that like usually we talk to each other in this capacity every 167 hours and it hasn't been long enough and I didn't miss you? And so now I don't know how this is going to go.
I didn't know that you normally do miss us, so that's
I
kind of
do.
nice.
I love Friday mornings. We get to reconnect and chat because I mean we talk at work every once in a while, but not like this. And so like Dame, I don't miss you yet.
That's fair.
And then also, didn't we have our one-on-one last week too? So then it's like I got a whole face full of Dame, and I don't need any right now.
How would our relationship be different if I worked in the office?
Oh, geez, it could be
bad.
Well, you'd be annoyed just like everyone else that works here.
Yeah, that's fair.
Okay. Oh, I'm sure you saw this breaking news. Employee benefit news says that Americans' financial literacy fell to its lowest level in a decade in 2026. Was that going to be one of your news stories?
It was not.
Well, there you go. Financial knowledge is declining. Americans answered just 47% of financial literacy questions correctly in 2026, the lowest score since the survey began. Gen Z and women lag behind. What a weird.
Why would you write that like that?
Why would someone write that? Okay, let me go with like my most cynical read of that. Okay, Gen Z and women lag behind. Gen Z scored the lowest of any generation at 38%, while women continue to trail men across most financial literacy categories, especially investing, insurance, and risk management. When are we going to get women to understand this money stuff?
Lily, do not click that.
Quickly transitioning to not focus on that aspect. Does it say what it came down from? Because my suspicion is it's like 1 or 2% lower than the last time they measured.
All I can see here is that women don't know anything about any of this stuff.
That's so wild.
Who
wrote that? Who wrote that and thought,
how?
Yeah.
Okay. Let's get anecdotal for a moment.
Okay.
Dame, you're going last. Okay, Kristen, you're a woman.
Indeed.
Do you feel like women trail men in terms of investing knowledge?
I do not feel that way.
Dame?
No comment.
Damien.
Insurance. Kristen, do you feel like women trail men in insurance literacy?
Anecdotally, when I think about the people in my life, I feel like if there's an insurance conversation, if we're talking about like a couple, I feel like the guy is often taking those like meetings or those conversations. I might buy that one.
Yeah, that was a pretty long yes, but yeah. Dame.
I don't like it.
I think this is a little bit more nuanced because I have a feeling that women have a much better idea of what health insurance looks like
Also true.
than
Default
what like
parents.
property and casualty stuff looks like.
That's a great point.
Mm-hmm.
Well, I'm gonna go a completely different direction right here. I trust more women to make better personal finance decisions than men. I'll just say that myself. That is straight from the ugly horse's mouth. Dame is not going to weigh in on that one, and Kristen obviously agrees.
Well, obviously.
But anyway, let's get these women.
Let's improve their financial
Guys,
literacy.
I got to read it again because it's so good. Gen Z and women lag behind. Gen Z scored the lowest of any generation at 38%, while women continue to trail men across most financial literacy categories.
My thing about the way that that's written is I would fully expect Gen Z to be less financially literate because they're younger. You just learn more about life anecdotally. You absorb more. That's true about so many things. The call to women, it makes it that much more absurd.
You can put the outlet on blast that wrote that or published it on its site.
That
Maybe
was
not.
written by Jimmy Nesbitt, a reporter from Employee Benefit News.
Oh, Jimmy.
Jimmy Nesbitt.
Jimmy.
Oh, Jimmy. Oh my gosh, it's so great.
It's so bad.
All right, let's start the show. Speaking of great, let's start the show. Who's going first? Dame, you want to go first?
Is this going to be one of those things where you think you need to go last?
No, mine's pretty benign, honestly.
Where's the fun in that?
It's not supposed to be hot takes. I'll go first.
Okay, Chris is going, then Dame, then I'll go last because mine has to go last in 3, 2, 1. This week on the Pete the Planner Show, we answer your money questions. Here is how this show works. You email us, askpete@petetheplanner.com. That's askpete@petetheplanner.com, and we will answer your email question on the air. It's a financial show occasionally, and we don't sell you anything. We just give you straight talk answers from 2 certified financial planning practitioners. That is Kristen Elanius.
Hello.
And Damian Dunn.
Good day.
And I'm worthless. My name is Peter. We stream the show live, and then it becomes a podcast. So if you miss anything and you want to listen to what we talk about between radio segments, go find the Pete the Planner podcast and be sure to follow us on all the socials that make us all feel antisocial. This week's show is the most overrated financial pieces of advice or focuses that one can think of. Each of the hosts of said show that I just told you all about will give you one piece of overrated advice. We're going to start with Kristen, then go to Damian Dunn, and then I will do the same in the third segment. Kristen, the most overrated piece of financial advice is?
The most overrated piece of financial advice, the most overrated financial goal, the most overrated financial topic, period. Sinking funds.
Boy, man, I can hear Googling starting right now. Sinking funds.
Okay, so emergency funds, we're familiar with the concept. The idea is that you should have a specific amount of money set aside. There's debate about how much for true emergencies, expenses you could not foresee coming. Fully in support of an emergency fund. I think they're underrated. In fact, I think we should be talking about them more. A related adjacent type of an account is a sinking fund, a fund for expenses that you know are coming, but their nature is maybe it's irregular. So maybe it's your car registration, a vacation, some general house repairs, things that you aspirationally maybe want to spend money on or know you're going to need to, but you can't call them emergencies. Those funds are put in sinking funds.
So I had a colleague here at Your Money Line where we all work the other day saying he basically does the digital envelope system and everything I think what he just described is he lives in the world of sinking funds.
Oh, it's devastating.
So why don't you like them?
I just think they're overrated. One of my challenges, and one of the challenges that I think we all face as practitioners, is it's so hard to speak to people in mass about the importance of improving your financial health. And I feel like the concept is it's maybe too aspirational for the average person, for them to not only be able to budget every month, to know what their emergency savings should be, but also be able to like perfectly bucket these infrequent expenses. And for the people that are actually using them appropriately, I would argue that it's not the function of the accounts that you actually need or desire, because all of that is living on the spending plan or the spreadsheet, however you track your money anyway. So why does it need to be separated into these like buckets of spending?
That's interesting because I'm hearing you. It's if you're that organized to set them up, then you're that organized to just execute on the plan anyway. So therefore,
Yeah.
you are overcomplicating it. Dame, you buying what she's putting down?
Yeah, that's exactly where I was going to go with this, is that if you already have these things identified and you are actively working towards them, it could all be solved with a spreadsheet. You don't need multiple accounts to try and track this. You're just making an administrative nightmare for yourself. But if you want to make sure that you're on track for whatever sinking fund issue is coming up, great. Just track it in one little way. I have that emergency fund. By the way, Kristen didn't say this, but I'm sure she would agree with this. Emergency fund completely separate from what we're talking about. Now, if you're going to have multiple accounts, do it that way. One fund for the emergency fund, one fund for sinking or accumulation or whatever you want to call it, where your excess savings goes. Don't make it more difficult for yourself than it has to be. Just track these things separately and know what you need to set aside for each of these things as they occur. Will it be tough to get started? Potentially, is if you're just getting started and you know there's $300 coming up next month, but you've only got 150 in that account. It's going to be a rough start, but you'll get there.
I know this show wasn't supposed to be a hot take show, but Kristen, what I'm wondering is why you're so against Dave Ramsey.
Oh. No comment.
No, let's talk about it. So, Kristen, digital envelopes or a sinking fund where every expense, whether it is a short-term expense or a longer-term, less frequent purchase, like the way the Dave Ramsey method works, whether it is cash or digital envelopes, is to just like everything is separated and everything is sort of tucked in there. And that has worked for millions of people as they've gotten out of debt. But you disagree with that method.
I disagree with the unnecessary complexity of that method. I think it's valuable for people to see, hey, my car registration is $600. I need to save $50 a month. Like, however that math breaks down for whatever those upcoming expenses are. I totally think that that's valuable. And I'm not disagreeing with the concept of using like an envelope system on a spreadsheet or in a budgeting app, but suggesting that those funds are actually living in separate places. My argument to that is, let's say I have a sinking fund for car repair and I have a sinking fund for my dog's vet bills, right? And I need $1,000 for my car repair and I only have $800 in that account. Am I really going to park my car until I have the other $200 and not take it from the account that I actually had for the dogs? Like, in practice, I don't think that that's actually happening.
As absurd as that may sound to some people that are listening, Kristen and I have both talked to people that have, I don't want to guess how many savings accounts set up, just accumulating dollars for each of these individual funds. So when she says this, that's unnecessarily complex, it is literally unnecessarily complex for some people. And it could just be taken care of with some keystrokes on a spreadsheet.
You know, what's quirky about developing a brand of advice specific to Dave Ramsey, as we're talking about here, is he's done two things very significant, I believe. One is this envelope system, which we've just called into question the practicality of it. But two is the snowball method of paying down debt, which is also counterintuitive in the sense that There is a better technical way to get out of debt than the snowball method. But from a behavior perspective, I think the snowball method of paying the lowest debt down first makes a tremendous amount of sense. It is what I would recommend, despite the fact that technically it's not the best piece of advice. I don't think having a bazillion envelopes stuffed with cash is the best piece of financial advice. And I also think it's a bad idea. Right. So that is the nature of this. So it's interesting that Kristen and overrated financial advice, she chose Dave Ramsey today.
I'm so thrilled at this time.
Oh, wait till it gets clipped up for socials.
Okay.
Kristen, I'm with you. I think sinking funds is a new term for some people, but the idea that it feels like the rigidity serves you, but oftentimes the rigidity of sinking funds compromises you and adds stress to a situation. To your point of like, if it's between vet bills or repairing your car and the wrong envelopes got the wrong amount of cash, then there's stress for no reason. Anything else to add there before we wrap that idea up?
I felt like that was pretty comprehensive myself.
Oh boy, Dame, you want to add anything to that before we move on to what will be my overrated piece of advice in the next segment?
No, I'm on pins and needles for yours.
I think you guys both already know what it is. All right. So coming up after the break, we'll continue on the most overrated pieces of financial advice. All of that is next right here on the Pete the Planner Show. I'm Pete the Planner.
Kids have a way of testing their futures early. Presentations to their stuffed animals, model rockets built out of spare parts from the garage, or turning the living room into their personal training academy. Help them reach their potential with an Indiana 529 education savings plan. With flexible investment options, tax advantages, and a convenient mobile app, saving is at your fingertips. Visit myindiana529.com and start with just $10. Read the disclosure booklet carefully before investing.
This episode is also brought to you by Home Concierge by NeighborServe. I got to tell you, I've been using NeighborServe's Home Concierge platform for almost 2 years, and I'm obsessed with it. So, Dame, you know how home ownership sometimes feels awful because something's always breaking. You want to tackle a project, but you don't know what it's going to cost. You don't know who to trust. You don't want to bring in and get 3 different quotes or overpay by $6,000. That's explicitly why I use Home Concierge by NeighborServe. They help me understand what a project should cost. They connect me with a local trusted pro and honestly just help me know where to start. And what I love most is they're not just selling my information to people. It is powered by trust, not ads. So if it feels like this is interesting to you and you want a super handy friend the same way I enjoy the folks at NeighborServe, I encourage you to go get 1 month free. That's right. You heard me. Go to neighborserve.com/Pete. Neighborserve.com/Pete for 1 free month of Home Concierge by NeighborServe. Dame, this is not their first appearance on the show, and I've told numerous stories over the years, including the squirrels that lived in my attic. NeighborServe was there to get them out.
Could they have potentially helped you? For example, I don't know if this ever happened, but you lock yourself out of your house. Could they have helped with that?
I don't know where they are on the Schlage bolts. I am not sure. That's a great question. Do they got to have a locksmith, right?
I would think.
This is no ordinary Schlage.
That's what I was going for.
One of my favorite stories of all time.
Oh boy, I was telling a friend yesterday who was here in our office. I didn't see him in a while, and we were talking about working out, and I told him the hot Pilates take my shirt off story, and the lights go on, crying. It's a terrible. The fact that it happened was even worse. Okay, Kristen, you are going to anger lots of bean eaters and rice eaters with your take about anti-Dave Ramsey there.
I didn't say that you shouldn't do it explicitly. I just said it's overrated.
I think, again, I said it in the segment. Dave is known for some like quirky things. The snowball is a quirky thing, and I like the snowball a lot. I think it taps in. The The type of people that find themselves in consumer debt are the type of people that would benefit from the snowball.
Yeah.
Right? The type of people who would not find themselves in consumer debt are not the types of people who would benefit from the snowball.
Do you really think snowball's quirky? I mean, we are probably too close to the forest to see it,
Yeah.
but do you think that's just the normal accepted way that somebody tries to get out of debt if they've got a plan to get out of debt these days?
That's a really good question. I think the conventional way to get out of debt would be to pay highest interest rate debts first, because you'll pay the least amount of interest. And
No.
so the quirkiness is that going against the math. Maybe.
Yeah.
Okay. I think my take I'm about to give actually agrees with Dave Ramsey. The one I'm about to give, the overrated nature of what I'm about to say. Boy, it's a Ramsey episode.
Is it too late to put him in the AI version of our show? Just to put him over, like in a picture over our shoulders or something?
Oh,
That's
just
funny.
different voices, Yeah, people need different voices.
Mhm.
And 3, 2, 1. Back on the Pete the Planner show. If you're just joining us on the radio, we are talking overrated pieces of financial advice. If you're just joining us on the podcast, weird thing to do to start at the 21-minute mark. Anyway, Kristen just shared her most overrated piece of financial advice, which is that sinking funds are helpful. How did you classify that?
Well, to be fair, I think that it was supposed to be financial goals. So that kind of had to tweak my wording a little bit. But in general, I find sinking funds overrated.
Wait, so you're telling me that I planned a show on a premise of which I'm not following?
I fear that might be true.
Fair. Okay. Here's my most overrated goal. A perfect credit score. I think the pursuit of really good credit is a complete waste of time. And it is more likely to have a person who is a financial wreck with great credit than a person who is a financial disaster with bad credit. Wait, you know what I mean? I think it's a really bad thing to just try to stoke your score for no particular reason. The goal, as far as I'm concerned, is to have solid credit, 750-ish and above, maybe 720 and above, and not necessarily do anything to make it be bad, but just earn the right to not care about it. Like, get to a point in your life where you just go, yeah, I probably won't be borrowing money again. And not that then you let things go or you pay things late. But when you're in your early 20s and late 20s and you're trying to establish yourself as a financial entity, you have to care about the credit worthiness of your credit score. But when you're in your late 40s, like Dame and I, at some point out, I just really don't give a rip. I don't think most people should care. So that is my most overrated thing, is people who try way too hard to have a perfect credit score. In fact, when people say to me, I've got a perfect credit score, I don't even know how to express with facial expressions of how little I care.
I'm always curious what hoops someone has to jump through in order to try and game the system to get to that ultimate goal of having a perfect credit score.
I'm glad you asked. There's a couple ways you can make your credit score go up that make no sense whatsoever to me. And so I think this is the basis of the conversation. Number one, let's say you've got, Kristen, choose a store at the mall that you want to store credit card from.
Ooh, I don't know if they have one, but if they had a card for Coach,
Okay.
making a comeback.
Coach.
Mhm.
Coach credit card. And let's say you've got $1,000 credit limit and you've got a $500 balance. Okay. The two experts and me on this show know that that'll be a small little ding to your credit score because of what's called a credit utilization ratio, that 50% of that credit line is in use for $500 balance on a $1,000 credit line. You want to be below 35%, or in that case, $349 or less. Are we tracking?
Yes.
So one silly way that you can change the dynamics of that is to call coach and say, can you increase my credit line to $2,000? And now you've got a 25% credit utilization ratio. And now you have more access to more debt and you still have the balance that you had. And so you are theoretically in a worse position financially, and yet your credit score went up. That is example number one. Dame, how valid is that take?
It happens all the time, and that's an easy way to try and fix the credit utilization problem, unfortunately.
I know that isn't today's show, but we recently had an example where a company did the opposite and tanked someone's credit score. It was really bad.
Wait, whoa, can you give me, say more? What are you talking about?
So we worked with someone who, in that basically the inverse happened. They had a higher credit limit. Then the company went in and said, you're too risky, lowered the limit, which increased their utilization, decreased their credit score. Then, because credit card interest rates are variable, they increased the variable interest rate on that balance as well.
That's genius.
That's so evil.
That is genius.
And I knew that that's exactly what happened. I knew that's exactly what happened when one of our guides started telling me that story.
Dame, that's genius.
I mean, it just helps cement that impression that big banks get across the world.
Okay. If we can step out of ourselves for a second, is that evil?
Yes.
What? But why? Because if the person's more of a credit risk, shouldn't they have to pay more?
But they had determined that they thought that she was creditworthy enough to extend her that large of a balance. And the only reason they did that is because she enrolled in their free credit monitoring. So it put her under review.
Oh, that's evil.
Yeah, it was evil.
Well, then it's not their fault if she asked for it.
She didn't. If she would have known.
Dame, this goes back to the original story about financial literacy.
Oh, I didn't care for
I'm
that.
just kidding. That for those on the radio, boy, you missed that one. And it's not as bad as it's worse than it sounds. All right. My second reason why I think credit scores are absolutely ridiculous by the nature of how they can be manipulated is that the different types of credit you have in terms of a diverse types of credit, a car loan, a student loan, a credit card, a mortgage, the more types of diversity you have across your credit portfolio, the better your credit score is. In fact, my credit score is like 825 or something like that. And the only reason it is not an 850 or whatever is because I don't have diverse enough credit. I have a mortgage, right? And I have a revolving credit card with no balance. So I am counted off for that. So if I was in the 600s or low 700s and I wanted to stoke my credit, I could go open credit lines that theoretically then put me at a disadvantage. Dame, is that a valid reason to think credit scores are silly?
It's a small piece of the pie
Yes.
of the overall credit score. The biggest one by far is just paying your bills on time. That's 35%, Kristen, if I remember correctly. And I think 30% is credit utilization. So if you get those two right, you're in pretty good shape overall. But I have had multiple conversations with people talking about, should I go get this kind of loan or something else? Well, if I do that, will it help my credit score? It is on the minds of people who are very concerned with their credit scores.
Yeah, I think ultimately it's one of those things of like, do you want to be good at borrowing money? Like, is it like, you know what? I'm really great at borrowing money. It's like, well, if you had to borrow money, you want to pay it back on time. And I think that's the end of it for me. Our data, which is gathered, and we give permission to the credit bureaus, that data is used to sell us things based on our own behavior. Our data is used against us. And it is the credit score, which is the catalyst to all of that. And so I think that's my challenge. Why is I want people to have reasonable credit because it impacts things like insurance rates and obviously interest rates. I think it is the wrong metric to care about. I would say it's kind of like body weight, an interesting metric, but probably not the most informative metric, depending on if the person is 4'10" or 6'10". Body weight needs a little bit more context. Gosh, I stunned these two into silence. These two are so expert that they were just like, I can't even add anything to what is the most expert take of all time. All right, so here's what we're going to do. Everyone's going to calm down. People are all worked up. I got to quiet them down, back them into their corners. Then we're coming back. Dame says that his most overrated piece of financial advice, he's coming at me. I can feel it. It's going to be something I've said, and he's going to turn it on me. All of that is next right here on the Pete the Planner Show. I'm Pete the Planner. Are you coming after me, bro?
I don't think so.
I feel like you might.
It's just, well, you'll see.
You guys, the worst thing in the world is happening to me later today.
Oh?
I'm flying to Orlando.
Have you looked at the forecast, Pete? I'm just curious.
I don't want to go too far here, but oh boy, I think I might. Orlando's my least favorite place on earth.
Oh. Earth?
Earth.
That's pretty aggressive.
That I've been to.
Okay, fair enough.
And I think it's because typically when I'm there, it's a business conference.
Yeah.
And you're just in this weird area. It's on International Drive. And it's just all for this sort of thing. And it's miserable.
That's fair. The context of why you visit somewhere definitely influences then how you see that place moving forward.
How long are you going to be there?
I'm getting there tonight. And the reason we're doing the show today is because I will be there through Friday.
You're lucking out, man. The feels like is not unreasonable.
Damn, I'm going to be in a conference room.
Yeah.
Okay.
Anyway, see you soon, Chamber of Commerce, Orlando. I don't know. All right, Dame, are you ready to ruin my life?
It's a little strong, but we'll see what you do with it.
Okay. Kristen, let's pre-rate this on terms of, is this really a hot take? 10 is it's just flaming hot. I'm going to burst into flames and not make my flight. One is it's like, okay, where do you think it is?
I think that it's going to be like when we did our hot takes and you thought yours was a 10. I think it's going to be like a 3.
Wait, you thought?
No, you thought your hot take was like a 10 and you were like all worried about it. And then Dame and I went and you were like, mine's not even that hot. And you made us let you go last. I think that's like this. Like, I think Dame's going to think it's aggressive and we're going to be like, okay.
I'll just say my email inbox begs to differ with you on that one. I got hammered for my take. All right, here we go. It's Dame, fire up. 3, 2, 1. Back on the Pete the Planner Show, the radio show that says to you, hello. It's a financial show. You learn more at PeteThePlanner.com or wherever you get your podcasts. Hot Take Olympics was a show we've done previously. This week, we are doing the most overrated pieces of financial advice that exists. Kristen says that sometimes utilizing a sinking fund or what are digital envelopes for all of your different purchases can be unnecessarily complicated. I said that wanting a perfect credit score and then managing your money accordingly is a waste of time and arguably a bad idea. And then Damian Dunn is here to join us with a take of what is overrated. Damian, take her away.
I will say this in a way intentionally. Try and get some reaction out of our beloved host. The most overrated financial goal is maxing out your employer workplace retirement plan.
That is, you're ridiculous. You should be ashamed of yourself.
Yeah, well, come at me, bro.
You think that's the most overrated financial? It could arguably be the best financial goal.
What?
Okay. Now we've got another person that you're pushing towards my side. Appreciate that.
Oh, what, you think I'm shoving Kristen towards your side?
Yes.
Yeah.
That's what you just did.
Wait. Okay. So Dame, let's make sure we're not arguing the wrong things here. You're saying that maxing out
the goal of maxing your employer workplace retirement plan is overrated.
Oh, that's ridiculous. That is such a bad take.
Pete, how many people do you think need to max out their employer retirement plan to have a successful retirement?
Everyone.
No,
Come on.
that's the most
Now
ridiculous thing
you're
you've ever
ridiculous.
said.
A lot of people. But here's the
No.
thing,
No.
Dave.
No.
Yes.
No.
What, you think very few people?
Pete, the median household income in the US is like $80,000. The median household is not maxing out their employer sponsored plan.
Social Security is going to chew up a bunch of the need on a month-to-month basis for the median household.
You guys are wrong.
Besides that, if you are the type of person who has the means to max out the retirement plan, might want to think about investing dollars elsewhere in other categories and other vehicles so that they've got more flexibility to draw from in retirement. Now, if you get to the point where you can do it and not even think about it just for the tax benefit to hit this arbitrary mark that the IRS sets for you every year, go for it. Knock yourself out. But there's a lot of people who, one, won't be better off if they have more money locked up in a traditional or Roth account. Two, it's just too big of a number for most people.
What I love so much about this is when Damien first said it, I definitely feel like I was on Pete's side.
Wait,
Now-
I repelled you?
I am like I'm like, you know what? Dame he's preaching here. This is good. This is good.
Dame, I actually buy what you're saying here. I feel like to strengthen my argument, I need to add some filters to it.
Okay.
And I don't know the dollar amount. But I'll say above a certain amount of income, maybe it's $120,000 a year as a household income.
Okay.
Maxing out at least one of the household retirement plans is absolutely necessary.
What?
So
No.
Not at age 22. I mean, I'm not
Why would
saying
it
at age
matter?
22.
Sure.
Why
Why
would
would it matter? Because of compounding interest.
No, I understand that, but from a percentage perspective, why would it
Yeah.
matter how old you are?
If the dollars are aggregate, and plus if the dollars are aggregate, who cares what accounts they're going into?
Pete has fully lost it. What is
Guys,
happening?
It is possible. It's possible. Okay, so this is wild to me. So you don't think, on a scale of 1 to 10, Dame, how important do you think it is for a person to make it a goal to max out their 401k?
I said it's overrated. I didn't say it wasn't a reasonable goal for some people. It's just overrated for a lot of folks. And like I said, if you are of the means that can do this and it's a good tax strategy, do it. Go for it. But don't overlook other uses for that money. Maybe it makes more sense to use some of those dollars to pay down debt before you retire, to try and clear the tables of stuff and make the dollars that you do have saved go even further. I mean, there's all sorts of reasons that you could lean into this and say, I don't know if maxing that out this year is the best use of cash for us.
As a huge proponent of the FIRE movement, when I hear you, Dame, you may have made some inroads on this argument, but I will say at first glance, it was shocking to me.
That's why I said it the way I said it.
You know what you're doing here, pal.
I'm trying. I'm getting, after 8 years or 7 years or whatever it's been, I'm getting better at this.
Okay, so the nuance in this to me is it's all about household income level, right? If you're making a household income of 80 grand a year, putting 20-some $1,000s in your retirement plan there's so much else you should do.
I mean, I think that's a good chunk of the decision tree for who's going to max this out. But I think there's more information that needs to be taken in totality to determine where those dollars need to be used most effectively for that stable retirement. Yet we always love to have a big old nest egg to be able to draw from. But what are the needs going to be? How quickly do you know there's going to be some major expenses coming shortly after you retire that you could weather easier cash flowing them now versus stacking them into an IRA where you're just going to have to, or a 401k, where you're just going to have to take them out, and we don't know what's going to happen to the markets in the meantime. So I think that it's a little bit more nuanced than just saying, hey, my goal is to max that 401k out. It might even be a year by year decision.
I would also argue that I think the strongest point that you made in all of that, Dame, is that it's an arbitrary number. The IRS, for all intents and purposes, is like just making it up. And it's indexed but it has nothing to do with your goals, your income. So the goal, while I understand it because there is a limit, so it feels like, hey, this is a measurable thing, is in no way, shape, or form reflective of your financial goals.
Gosh, this is
Team
interesting.
Dame.
I think, you know what? I think I made my way to Team Dame. I don't think my brain's working this week. But at first glance, I felt offensive.
It really did. It really did. I was on your side.
That was just good presentation.
Okay, well, let's stay in the same camp. This is what I should have chosen. The most overrated piece of financial advice is to hit the company match.
Oh.
What?
Kristen's on my
Okay.
team.
Well, I see what you're doing there. So
It's not enough.
Because it's not enough.
Yeah.
It's an arbitrary goal. Your company made it up.
Yep.
See, that is a spicy take, actually, because then people hear it and they'll go, oh, okay, well, I won't put money in. It's like, no.
Not what I'm saying.
It's not nearly enough. And so what I think is interesting about this conversation now, Dame, we go from 4% and 4% theoretically is not enough. However, $20-some thousand a year is probably too much for a lot of people.
Mm-hmm.
Is too much for a lot of people.
There it is.
Probably. Milk's got to be what, 50 cents a gallon these days? Oh boy, good times.
That's hilarious.
All right, these were good ones. Who had the best overrated take? Not that whose take was the most overrated, but who had the best overrated take here?
The way it played out, Damien's for sure.
I
That
think
was
they all
good.
captured the spirit of what we're trying to do,
Yes.
though. Yours is overly complicated. Mine will send you in the wrong direction. And Dame's is about putting undue pressure on a situation in which resources could be applied differently.
Yes.
Oh, okay. Well, I like that. All right. I have a feeling that this week's biggest waste of money of the week might be an all-timer. And then, of course, the news stories of the week. So much going on in the markets, the economy, and Damian Dunn is out on the street covering them all. So coming up after the break, biggest waste of money of the week and the news right here on the Pete the Planner Show. I'm Pete the Planner. This is random, but I will never say how old I was when I realized it was not for all intensive purposes. I'm 100% with you.
I said intents and purposes, didn't I?
I think so, but
Okay.
I
I thought I said it right.
do you know how, along that same thing, like I thought I think I've said this on the show before. IU's mascot, I thought it was a cactus for a long time because of the I and the U.
Stop.
When I was a kid, I thought they were the cacti, Indiana cacti, and then I realized that it's an I laying over you. Dame's losing it.
You have never said that before.
Have you lost some respect for me? I was a little kid. I had dreams.
I thought it was a cactus. I mean, honestly, that's fair.
Yeah, sure.
Without the context, and not understanding like what a university is truly,
Okay, how about this? For magic tricks?
I wouldn't double down. Okay.
Okay, so when a magician opens a door with magic and they say open sesame, and you think of sesame seeds, it's sesame. Sesame.
Yeah.
Open sesame, not open sesame.
Mhm.
And for a long time, I thought it was like seed adjacent.
I think that one's super common though.
Agreed.
Yeah. Okay. We're all idiots at one point, and some of us make the way out. I have not.
There we go.
Great topic, Pete.
What, for the show?
Yeah.
You think so?
I think this has been good. I mean, I think that you kind of deviated from your thesis, but it worked out.
That seems out of character.
I mean, depending on how aggressive the intern wants to be on cutting these up, there can be some really spicy ones.
What you should do is A/B test. Like have the clips that are like really polarizing on an account and the clips that are like actually the good stuff on an account. and just see what part of the internet hates us the most.
I kind of feel like I might have to require approval before any of this goes up this week.
Yeah. There were many times taken out of context.
Okay. All right. Let's do this.
Okay.
I think my son was running through the house on Sunday night after my wife told him not to, chasing my daughter. And he kicked my charger on my laptop and sent my work laptop from the counter onto a wood floor. And I heard it. I was out at the grill and I heard it banging around. And I heard my wife, what do we want to say here? Sharing thoughts with him. I go running inside and I see the look on his face. I see my laptop on the ground. And I was like, oh, this isn't good. So last night, I got home from work and I was like, hey, bro, my laptop did not work today at work. And you're going to have to pay for it. He's like, well, how much is it? It's $1,700. He does not have $1,700, as you might imagine. He's 14. Is just a small portion of that. He's like, well, how am I supposed to come up with the rest? I'm like, well, we can start looking for jobs. So like you can see it on his face. And then I realized that like I'm really into character here with him. Like, no, it all works. By the way, it works fine. I was just like a joke. I'm like going, and then I'm going like I'm halfway in this joke, and he's like taking it seriously, asking all these earnest questions. I'm like, I should probably pull out of this because I'm now committed to the character of angry father, but I was just kidding. And now that I say it out loud, that's crazy. That's crazy.
I have many years, and then I'll let you know how crazy that was or wasn't.
I saw a T-shirt that ties into this story very nicely. That just simply says on the front, "I yell because I care."
Yeah,
this situations like this make me think that T-shirt makes a lot more sense.
You know what we should do? You guys want to get him on the show? Talk. Oh, we don't have time this week.
Yeah, you said.
Oh, I could FaceTime
You're
him.
literally almost out of time.
He's on summer break. Bring him in.
We'll bring him in sometime.
It's been a while since we've had a
It
cameo.
has been a while. His hair wouldn't fit on the camera. Okay, 3, 2, 1. This week's biggest waste of money of the week, right here on the Pete the Planner show, is the Mark Hotel World Cup extravaganza package. Since Jacques Grange reimagined the 1927 Madison Avenue landmark, the Mark has been the New York address of choice for A-listers, heads of state, and the designers, musicians, and film directors who define the cultural calendar. The World Cup finale at MetLife is the most watched sporting event on Earth. The Mark helps you enjoy it with 4 nights in the largest hotel penthouse in North America, a 10,000 square foot residence with a private rooftop terrace overlooking Central Park, where each evening includes cocktails, a caviar service from Caviar Caspia. The stay includes personal butlers, in-suite wellness services, and hospitality staff on call. For the final, guests are transferred to MetLife by private helicopter, bypassing the crowds for midfield pitch-side premium seating with exclusive lounge access and a dedicated entrance. Now, I know neither of you are soccer fans. In fact, I would be shocked to even begin to ask you who you believe is going to win the World Cup, and we will do that in a moment. But first, Kristen, how much does this World Cup extravaganza package cost?
One of the most charming things about Biggest Waste of Money is how you don't have context, right? But you've just described like 20 things that I have no basis for knowing how much they cost. This experience costs, it's just for one person. I'm sorry. Or it's like the room.
Four
people?
tickets.
This
or no, who knows? No one knows.
I don't know. This is a quarter. This is a $200,000 experience.
Damien?
a 10,000 square foot penthouse for 4 nights with all of
Right.
that staff during the World Cup, which we know things are already cranked up. This is at least $1 million.
$1 million.
Really?
Yeah.
Ding, ding, ding. You get to spin the wheel.
Kristen, who is going to win the World Cup? I want an earnest guess here.
You've already asked us this, and I said us, and you guys laughed at me and said not us. And the only team that I know is Tottenham Hotspur, I think.
God, this has gotten worse.
Is that not even the right league?
Okay. The World Cup is countries,
Oh, excuse me.
not clubs. And Tottenham, my club, is
Really bad.
sadly in the worst form they could be in right now. They almost got kicked out of the Premier League.
Bummer.
So that's not it. Dame, just say any country, Dame.
Us.
No. Well, I mean, I do love the commercial that's like, yeah, the USA, and it's like, I think it was Eruzione sitting at the end of the bar. It's like, you don't believe in miracles. So I want to say USA, but I mean, I feel like you've got to say somebody like I'll go with Brazil.
Fair enough. That's good. All right. The answer is Spain. All right. Dame, what's in the news this week?
The new chairman of the Federal Reserve, Kevin Warsh, wants the Fed to start looking at inflation a little differently. No, not with the cock of a head, Pete. Traditionally, the Fed focuses on broad inflation measures that capture price changes across the economy. But Warsh has suggested paying more attention to alternative measures, including something called the, quote, trimmed mean, which removes the biggest price spikes and drops to try to get a clearer picture of underlying inflation. On the face of it, that was what the look on that I made when I read this the first time. Hold on. Let's
So
We're going to cut out gas and grocery prices to get the real number.
we're going to cut out all the spikes of the real things that people purchase. That way it looks like it's flat.
If gas prices jump because of war or egg prices spike because of a supply shortage,
Flu.
should the Fed react to those temporary shocks, or should it focus on the broader trend underneath the headlines? That's the debate that Warsh is trying to have. The challenge, of course, is consumers don't buy underlying inflation. They buy the groceries, the gas, the utility bills, all that stuff. So economists may spend years arguing about which inflation gauge is most accurate. Meanwhile, the rest of us are going to use the one that we've always used. How much did that cost the last time we bought it?
I don't know how much more I could not like that. I don't care for that.
Yeah, that doesn't make a lot of sense to me. Like, I get the nature of they're trying to take inflation out of the 24-hour news cycle. Like, I get that deeply. But then taking the things that people feel the most out of the calculation feels like it's a miss.
I'm not sure who gets to make the judgment call that something is on a temporary spike or drop and it should be ignored.
Yeah, I just don't think it matters why something spikes, because if
Correct.
like who gives a rip whether it's supply chain shortage or a war or a supply chain shortage caused by a war or an excursion.
And also to our live listeners comment, the prices are, I mean, gas prices perhaps, but like generally speaking, we're not seeing like grocery prices go back down once they increase. So what would be the point?
Dame, what else is in the news?
The new Trump Accounts app has officially launched, giving families a way to manage government-backed investment accounts for kids directly from their phones. The accounts are part of a savings account, a part of an investing account, and part of the government-discovered compound interest, I think. But anyway, the app was built by the Bank of New York Mellon and Robinhood, and families can now enroll and manage in the accounts through trumpaccounts.gov, and that will start July 4th. As far as the eligibility for the $1,000 contribution from the federal government for kids born between 2025 and 2028. Kristen, have you made your way to trumpaccounts.gov?
I have not, but I need to as a commitment to informing other people. But what was that date that you just read to me again?
For kids born between 2025 and 2028, they will begin to receive $1,000 contributions starting July 4th.
Right, on the holiday.
Yes.
Okay.
Trump accounts?
Government closed, and so they'll be working overtime to push those contributions out.
What's the name of the website?
I had trumpaccounts.gov,
Oh, okay. I had .org, and needless to say, someone else bought that. Gosh, when are they going to figure that out? You know what I mean?
Yeah.
Trump account, I can't spell.
Accounts.
Plural.
And so they didn't use Trump account either, singular.
Holy smokes.
Like, you got to surround it for idiots like me.
Misspellings, everything.
Yeah, we need that redirect for sure.
Like, I admittedly know nothing about Trump accounts, and so I've sort of reserved all thoughts around them until I take the time to understand them. And at some point, thanks to Kristen, we will report back and tell you our thoughts. In the meantime, buy all domains close to the domain you're targeting. That's just a little expert advice from your friend Pete.
This was just intended to be a PSA that if you qualify or want to open one of those accounts, you can do it now.
Do we want to take bets on how many days past the 4th it takes for me to see funding?
Ooh.
Wait, what are you? The cynicism of Dame now. Are you a 48-year-old
first of
man?
all, it's not July 4th is a Saturday. So not only is it a holiday, but it's a Saturday. So the money's not going into the account on the 4th. And I suspect that it won't be there Monday either.
Well, no.
Gosh, your financial literacy is incredible.
I am above average.
That's a great point, Kristen. But I'm looking at the site right now because I finally made my way to the domain. And it's attractive. Like, it looks pretty intuitive. Of course, I'm not eligible for any of these things, but actually, I am. My kids are.
You can. Yeah.
They don't get the $1,000 though, right?
Correct.
Right.
Yeah.
Dame, do you have a quick one to end with?
Texas barbecue is facing a problem because turns out there aren't many cows in the world. Price of brisket up 30% from a year ago. That is just a travesty, Pete.
Gosh, I
Not
feel that
for me.
deeply. All right. Well, next week, Thursday, what time? 10 a.m., 9:30? I don't know.
It's weird. It's like 9:30 or
I think.
10:30. It's on the bottom.
Download the podcast. Please subscribe on socials. Like up the stuff. Smash that notification button. Send you good vibes. Good vibes are all that's in the budget. I'm Pete the Planner. This is the Pete the Planner show. Just feels dirty. Just feels dirty. Every time I dive back into social media after the original, like, real thing I was doing, every time I've dove back in since then, I'm just pinged with regret. I'm just like, God, this is so performative.
But that is actually the problem, I think, is like when you come in and out of social media, then it messes with your algorithm. And if you just maintain like an appropriate amount of presence, you're not like over consuming to the point that Pete feels like he can't consume social media. That just keeps everything a little more level set. I don't hate social media as much because I'm chronically online, you know?
Oh man, I'm looking at this Trump stuff, the Trump account stuff. We may have to do a whole show on this.
Oh, no.
Not critically, just like
I'm going to have to learn about it.
Like, okay, I have a minute, so we're going to do this.
Okay.
They have an illustration that says,
That's great.
at age 27, if you contribute nothing, you'll have $15,000 in the account based on the $1,000 opening deposit.
That's aggressive growth.
Indeed.
They say if you put in $250 a year and get the $1,000 deposit, you'd have $51,000. It's $250 a year.
From birth to age 27?
Yeah, so 27 years of $250 deposits plus the $1,000, you'd have $51,000.
Why age 27? What am I missing there?
I'll get there.
Okay.
And if you put in $5,000 a year and the $1,000 initial deposit, at age 27, you'd have $742,000. Dame, these types of illustrations would get you kicked out of the insurance industry.
For those of you that don't know, it's really hard.
At age 18, oh man, this is crazy. This is a whole show. We're doing a whole show.
Oh boy.
Well,
At $5,000 a year to age 55, you'd have $13 million according to Trump accounts.
That math doesn't make any sense to go from.
All right, so welcome to next week's show.
Oh boy.
Kristen, you got homework.
Great.
Next week's show, Trump accounts. Everything you need to know.
take copious screenshots as you're going through signing up for that account, Kristen, so we can.
Oh, yes.
I really want it to be great. I mean, I really want it to work, help people,
Sure.
but like you can't illustrate $13 million account value
That's
based
rough.
on this country's financial literacy.
Sure, you can. They did.
Oh,
Kristen, do you need help setting that up?
oh, actually, great call. I am really lagging behind my male counterparts. So,
All right. Hey, everyone, this was delightful. And stay getting money.